Alright, welcome to my channel. I wanted to make a video today going over some major changes that I've done in my portfolio. The main changes that I have made is that I've sold out of VOO and QQQ. These made up almost 50%. It was more like 47 at the end of the day, but they made up a large majority of my portfolio. They were the two largest positions. Then ASML came in. There are a couple factors that brought me to the decision to fully sell out of QQQ and VOO. One of those factors is what happened with ASML and Netflix. It might not look like it, but Netflix was a position that I initiated, and that position went up over 100%. And that made no impact, relatively no impact. It's like it didn't even matter that it was a great pick. I did all the research and I just didn't have the capital to make it a meaningful position. Almost half of my money is tied up in two ETFs that are really an anchor to my account, right? So then I also made around 100% gain in less than a year. These were both in less than a year. I made 100% on ASML as well. I knew that was a good deal. So I positioned it like it was. It was around 5% of my portfolio. And now, or at the time of making this, before I made this change, it was 11% of my portfolio. And that in of itself still didn't really feel like it was that meaningful. I double my money. I want it to mean something. Another factor for making this change is that I just have a smaller portfolio. I'm not in the hundreds of thousands of dollars, but I think with these changes I have a greater chance of actually making some serious money with this. I'm not going to go out and buy some speculative companies. I'm still focusing on good, high quality businesses, but this just gives me more exposure. And I believe I'm going to be correct more than I'm going to be wrong. And if that's true, it'll pay off. So, all right, the third factor is that there is just some really good deals in the market today. I'm using this program called Qualtrim, and this is my current portfolio. Right, let's just take a look at this. Netflix down 30% from all-time highs. Amazon 20, 28 S&P, 46 into it. ASML is down 14% from all-time highs. SoFi down 51, Meta down 31, MasterCard down 16, Zeta down 35, ServiceNow down 51, Uber down 30. And what I'm getting at with this is that there's just a greater opportunity for upside. There's a saying that goes, money's made in a bear market, but it's collected in a bull market. So right now, I'm trying to position myself, buy these companies at great valuations. Everything's on a discount, so I'm really posturing right now to have some great upside in the future. So here is my current portfolio. Obviously, you can see that I have gotten rid of VOO, gotten rid of the SPY, or VOO is a SPY. I got rid of the QQQ, which is the NASDAQ. Now I'm looking at Amazon being my biggest position. I think it's once their CapEx cycle ends, they're going to explode. Same with Meta. I think Meta's actually positioning themselves really wisely right now. They're taking a big swing, and I think it's going to pay off. MasterCard, phenomenal company. S&P Global, phenomenal. They're just getting beat down for no apparent reason, in my eyes. ServiceNow is people think you're going to vibe code ServiceNow, but you're not. The data they have, the integration they have in Fortune 500 companies is is huge, and they're down like 50% from their high. I think this is an easy bet. Zeta, they're a smaller cap, around 4 billion market cap, and their fundamentals are just wonderful. So I am positioning wisely, I think. They're a martech company, marketing technology company. Give on average around a 6 times return on capital spent with them, which is phenomenal. And that's, you take care of your customers, they're going to take care of you, and you're going to grow. That's what they're going to do into it. This is more of a binary event for me. I don't believe people are going to trust AI with their taxes this year. And um, we're going to find out in Q1 results. That's kind of a little bit of a risky position, but it's whatever. SoFi, I think they're a great company and they're at a great price. I love the management. Netflix, that's that's up big for me. ASML, I actually have been trimming ASML. I had two tranches, two of the three tranches that I bought with ASML finally hit long-term capital gains. So I sold those because those were up 100 and some odd percent. And I used that money to strengthen my other positions. And then Uber, I just added Uber. I was watching, I think his name's Drew Cohen's. I'll put his YouTube on screen, talk about Uber, and I don't believe AV is going to take their job. I think they're actually going to have a positive reaction to autonomous vehicles. So that's kind of just my thought process with this portfolio. And then that's just cash that I have in my Fidelity. I have more cash on the sideline. I have I'm actually about 40% cash right now, waiting on the side. Maybe not 40. I'd say 30 to 40% cash right now on the sideline. And I'm just slowly, every big drawdown day, I've been adding to the positions that I feel are the best buys right now. Obviously, I wouldn't be buying something that I don't think I'm going to get a return on. And I think over time, it might not be this year, it might not be next year, but eventually I will have beaten the market over however many years that I invest, And right now I'm down more than the market. The market's, they say the SPY's down like I think 6% this year. I'm down like 9. But with these buys, I'm buying low, I'm buying everything at a discount. I truly believe that in enough time, I will outperform the market.